Hello, trading has closed on August the 5th, 2025. We'll start with our disclaimer, go over our calls, make our predictions. Please stop the video and read my disclaimer. Also remember that from now till mid-December I'm not following the market intraday and I won't be risking my own money on these calls. At least not tomorrow. Look, here's what we said. We said we had the pattern with the early low, which is what we got. Tomorrow has the early high. We said we should print higher price, but that doesn't mean that we close higher, and that worked. We have an inverted diamond on stilts pattern. There's resistance at the origin of the left stilt. Well, here's the left stilt, and that's how high we got. So that's the origin of the left stilt. So that's all worked so far. There is a new target for tomorrow, 63.2857. It's optional. It doesn't have to print, but it's going to print. In the 1 year I checked it, it printed 95% of the time, but that's not 100. And keep in mind that we're still under the July FOMC announcement price. And as long as you're under this price, you should expect the market to move down. And when you're over the price, you expect it to move up. And we're still so far under that price that we can't be convinced at this time that this recovery is going to amount to anything. That could all change. We could gap up 100 handles tomorrow, who knows. But for right now, that's a significant move which hasn't been reversed. Well, during the day we got an ultimate sell signal. That worked. There is an optional higher target to go over this line. It doesn't have to print. And in fact, these yellow lines are support resistance. Here they're resistance. And we stopped right at resistance. So I'm less confident than I usually am that we're going to see that. But again, it's optional. It's just something which happens often, doesn't have to print. And so far, this is a rally to resistance, which stopped right at resistance. The afternoon pattern said this move was false, wouldn't stick. Said this drop here was false, wouldn't stick. We've already retraced, so that's played out. Well, here's what we had. We had a diamond on stilts pattern. Half a diamond's enough. We now have a diamond again. Now, a diamond's supposed to be a negative pattern, and it doesn't really help that this top is right at a 61.8% retrace of the all-time high from last week. So for right now, we had an impulsive move down. It was enough to say this was an excellent candidate for the top. We really have to get follow through to seal the deal, and that hasn't happened yet. But all that's happened so far is backing and filling. We stopped right at the 61.8%. We didn't clear any of these prior relative highs. A diamond's a negative pattern. Diamond on stilts don't have to come back to back, but often they'll come back to back to back. So we don't have to have a stilt-like move down, but if we did, there'd be ample precedent. You really got all you need to continue the drop. All you need to do is have a stilt-like move down and undercut this low. Once we undercut this low, it's going to be hard for me to see how we recover. But it hasn't happened yet, and anything's possible. I mean, if we don't do that, we go up instead, and particularly if we take out last week's high, then the idea is wrong. And right now, you can argue for it being either way. So we're going to use the mixed signals rules. Here they are. Wednesday's pattern has the early high regardless of where we open. It is bullish. There's a higher target. It's optional, but usually it prints tomorrow. If not, we'll just forget it. In addition, we dropped all day, couldn't close under intraday lows, meaning the decline didn't attract any followers at all. But it is negative. This week's rally so far just backed and filled last week's drop, and that was a clear impulsive drop. And so far, all we've done is backed and filled in a standard Fibonacci ratio. That's not what it's going to take to turn the tide back up again. Bears need to drop and ideally undercut last week's low to keep the decline going. Until last week's high falls with conviction, the odds favor more downside to come, even if it doesn't come immediately. I mean, it doesn't have to come tomorrow, but this is all you need to confirm the drop, and we are stopping right at the Fibonacci target, right at a MEJT resistance level, and far under the FOMC announcement price. Until proven otherwise, I'm going to assume this drop's not over. Now again, we open up here and take this out. Well, forget it. Remember the rule. If we gap sharply in the undesired direction, that kills the call before the open. Right now, the commonest thing is a gap and prompt move outside the range. And all the bears really need to do is to gap down, go outside today's range. Will probably undercut this low too. Hasn't happened yet, but until proven otherwise, I think we've made a significant high here. And even though I don't think any drop is going to be a disaster, I'm not willing to let go of the idea that we've made a top last week unless and until that high is taken out. Signals are mixed. It is the pattern with the early high, and that's today's call.